let's start at the beginning. Should you pay off your mortgage early? In a word, probably not. I'm going to spend the most part of this video explaining why you shouldn't pay off your mortgage early, and then at the end I'll explain the best way to do it if you still want to. The biggest reason for overpaying your mortgage is psychological. If you look into this topic, on the one hand you've got people that say, you never regret paying off your mortgage early. It's a great feeling to be debt-free. If I don't have any mortgage payments, then I can reduce my hours at work. I won't be so stressed about earning. I won't have to worry about my home being repossessed. I'm not saying there's anything wrong with these things. For some people, the peace of mind that comes from not having a mortgage is worth what they are giving up financially. Because no matter how you dress it up, paying off your mortgage early is still a really bad financial decision. What? How? Dad, surely that can't be true. Friend, yes it is. Dad, surely that can't be true. Friend, yes it is. Let's take a little look at a mortgage overpayment calculator to see how much interest you could save. Let's take a little look at a mortgage overpayment calculator to see how much interest you could save. Okay, so we have a mortgage overpayment calculator here from moneySavingExpert.com. Let's see, right. I've got a outstanding mortgage of, let's say, £160,000. Okay, got 25 years left on my mortgage, and I'm paying an interest rate currently about 2.2%. Okay, so if I make overpayments of £200 every month, that means I could save myself 14,038 pence over the course of 25 years. Yes, Dad, that's great. That's the thing I want to hear. That's what people are thinking. When people see that number, they think, that's an amazing amount of money to be paying on interest. I'm glad I'm not paying that on interest. Also, I'll be free after 18 years and 2 months instead of a full 25 years. Surely that must be a good thing. Well, let's take a little look at what happens if you put that number, that extra £200 that you had every month to overpay. Instead of overpaying on your mortgage, just getting 2% return on investment. What if we put it into some kind of investment that maybe got 8% returns, which is not unrealistic for the stock market over the long term. So let's look at the compound interest calculator. So here we are. We have an initial balance of 0 because we're starting at nothing. We've got a compound interest rate of 8%. Over 25 years, we're going to deposit £200 every month. Now then, what happens to that £200 every month? We've invested £60,000, and that £60,000 turns into over £191,000 in interest of £131,000 worth of interest on that investment. So, do you want to save yourself £12,000 of interest, or do you want to earn £131,000 worth of interest? That's way over £100,000 better off you'll be after 25 years if you invest rather than paying off the mortgage. Let's just take the example of someone who I heard on the Personal Finance podcast recently. This chap was saying that he would really value the extra £500 a month he'll have when he's not paying off his mortgage anymore. Great, I'm sure he will. Here's the way that I think of the problem. If I can buy investments that will cover my mortgage payment, then hey presto, I'll be in the same position of being £500 or £700 better off every month, because the investments will cover the mortgage, and I'll have investments that are going up in value over time as well. That's exactly what I did. We were overpaying our mortgage and we only had 13 years left, but we actually got a bigger mortgage, extended the term of the mortgage, and reduced our monthly payments. Then we went and bought a couple of rental properties, and hey presto, the rent from the properties covers the cost of our mortgage. Now we can change our lifestyle, we can potentially invest more, and we've got 2 properties that are going up in value. And they may well quadruple in value over the next 20 years. There are also psychological reasons not to overpay your mortgage. One of the biggest ones is once you've made those overpayments, it can be hard to get that money back. If you've been diligent in overpaying your mortgage and then suddenly your car breaks and you need a new car, or the render on your dormer starts cracking and you need to get it re-rendered, you need to get your hands on £10,000, that's not going to be easy to get from your mortgage company. Make sure you've got an emergency fund before you start overpaying your mortgage. Or if you want to use your capital to start a business, your mortgage provider won't look too kindly on that either. If, however, you know yourself well enough to say, I'm not going to invest for insert reason here, and you will spend any money you might have for overpayments on tax, then by all means, go ahead and overpay your mortgage. Otherwise, you'll be better off investing. But having said all that, if it's in your personality to worry about what could go wrong, you want to play it safe, you've got yourself a civil service job and you're happy with your 2% return on investment, that's absolutely fine. Personal finance is personal. And personal can mean I don't want to spend a whole lot of time learning about this. I'd rather give my attention to something else. As long as you're not blindly digging yourself into a bigger financial hole, then go for it. One of the joys I've had over the last year is becoming friends with a chap who understands all the mathematics behind investing and still doesn't want to get involved at all. I always recommend getting to know and sharing experiences with people who think differently to you. Chris, you're not crazy. You think differently to me, and I'm glad to be your friend. So, if you want to overpay your mortgage, then how is best to do it? Well, one way is to throw whatever money you have left at the end of the month towards paying down your mortgage. This isn't that structured and doesn't give you any idea how early you might be able to pay it off. Another popular way of doing things is to pay your mortgage every 2 weeks rather than every month. And this essentially means by doing this, you'll be making the equivalent of 13 monthly payments every year. So take your monthly mortgage payment, let's call it £700, halve it so then you're paying £350 every 2 weeks. Let's take a little look at our numbers spreadsheet. I'm actually pretty impressed with myself. I've managed to build an amortisation schedule in Numbers, which is the Mac equivalent of Excel. Here we are, we have the initial loan amount. Now I made this £147,614 exactly, so that the monthly mortgage payment would be £700. So what we've got here is we've got the loan amount, the rate, the term, the periods in the year, so if you're paying every month, that's 12 periods in a year, and we've got the number of payments, which is basically 25 times 12 to get 300. This is the monthly rate, so this is basically just the rate divided by the number of periods in a year. So you start off on month 1 with a beginning balance of 147,614. Now in here you've got this cell here. In here you've got the interest, which is C10, which is this multiplied by the monthly interest rate, and then the principal is the difference between these two numbers here. Your ending balance is the difference between the beginning balance and the principal that you've managed to pay off. Your ending balance after month 1 is £147,283.03. Then that cell goes into here. So you've got G10, basically it's equal to that. And if you notice down here, this is G11, G12, etc, etc, etc. This is always this cell here. So if we look at here, it's the $D $4 cell, which basically means stick to that cell. So basically if we change these numbers, so if we change this to 2%, which is 0.02, then all of these change, etc. So let's change it back to 0.03 for a minute. So down here, eventually after a number of years, pay off your mortgage, 300 periods, 300 months, you make your final payment and you are down to 0. You've got annual payments of £8,400.03. If you change this to bi-weekly, then what happens is we're going to have the same initial loan amount, which we could also change, same rate. This time we've got 26 periods in a year, so it's 52 weeks divided by 2, which is 26. So you've got 650 payments now, and these are all going to be of £350. So now it's an annual cost of $9,100. So again, we've got our beginning balance, our payment, our interest, our principal, and our ending balance. And if you scroll all the way down here, you'll see it starts going negative at some point. Oh, there we go. So it starts going negative after 579 periods. So if you divide 579 by 26 periods in a year, and it's 22 years, 0.269, blah, blah, blah. It's about 2 years and 9 months early that you pay it off by paying twice a month instead of monthly. The biggest problem which people have with this is that in 2 months of the year, you'll have an extra £350 to pay towards your mortgage. This could be a little bit of a tight squeeze for some people, especially if you don't really remember about it. So let's just take 2022 as the year. If you pay every Friday normally, then you pay every other Friday now. So in January, you've got the payments on the 7th and the 21st, so that's 2. In February, you've got payments on the 4th and the 18th, which is again 2. And you've got payments on the 4th and the 18th, again March, same dates. And then in April, this is the first time you're going to be paying £350 extra to what you would normally pay. You'd be paying £350 on the 1st, the 15th and the 29th. And then, as it so happens, in 2022, you'll also be paying on December the 30th, which is not a great time that people have a lot of money usually. So here's an alternative way of doing it, which means the most you'll be overpaying in any month is £50 instead of £350. Instead of dividing your monthly payments by 2 to get how much you would pay every 2 weeks, divide your monthly payments by 28 and do it every day. That means in February, you'll have paid your full £700, and then in the rest of the year, depending on if it's got 30 or 31 days, you'll be paying £725 or £750 every month. And that actually is the same amount of overpayments, roughly, a bit more. But it doesn't feel so bad. So if we have a look at our daily payments, now here we go, we've got the same loan amount as we had before. We've got a same rate, 3%. Now we've got 365 periods in a year, and that means we've got a total number of payments of 9,125 periods, and this is the period, this is the amount of interest that we're paying every day. It's the interest rate for every day. So we pay £25 every day, £12.13 worth of interest. On the first day, £12 of 87 worth of principal payment, and you scroll all the way down, and again, it starts to become negative at some point. There it is. So you end up paying off your mortgage after 8,082 periods. So 8,082 periods, get a calculator, 8,082 periods divided by 365 is 22.1 years. So in fact, you're actually doing it about a month quicker by doing this. You can just set up your direct debit for £25 a day, and by doing this, you'll be 2 years and 10 months quicker in paying off your mortgage. I realise that this might get really annoying both for you and the bank, but I had a thought experiment which I was pretty proud of myself for making the amortisation table, and I didn't want it to go to waste. So, do you overpay or do you invest? Let me know in the comments. If you want to know where to get started investing, then check out this video right here. It's an oldie, but the principles still apply. See you in a sec. Peace out.